Hello and welcome to Hilosoft's Money Boot Camp. Today's session is about gross profit, also known as gross margin. The formula for gross profit is pretty simple. It is sales minus cost of sales. A sale occurs when a product or service is sold for money. The term cost of sale is a bit more cryptic. Cost of sale in the ordinary sense of the term is anything directly associated with the product or service being sold. As an example, it could be the material that the product consists of. Another example is a commission paid for the sale of a product or service. In all cases, the items included within the term cost of sale are considered variable costs, as opposed to fixed expenses. Cost of goods sold is a common use definition of cost of sale, especially when products with inventory considerations are involved. So far, we've not changed the formula, just some of the terms. Gross profit still means the difference between sales income and the direct cost to produce the sale. At this point, I will replace the term COGS with the term variable cost, and the formula still remains valid. The original numbers do not change. Most companies can divide the operational expenses into two major categories. The first category is variable cost. We talked about this a moment ago because it is a major factor in the formula that identifies gross profit. The other kind of expense is called fixed costs. Although the term fixed cost is an important factor in the overall scheme of things, it does not have much to do with gross profit. Fixed costs are also known as overhead and running costs. These expenses don't change as a result of increase or decrease in sales. Examples of fixed costs include monthly obligations, such as rent, leases, business insurance, salaries, and telephone. Just about any month-to-month budget item that's independent of sales variations. Variable costs, on the other hand, move up and down proportionately with product sales. The term variable cost can be used interchangeably with cost of sale or cost of goods sold. At this point, I will bring up the Idea Composer to illustrate the functionality of the terms that we have covered so far. This page is responsible for capturing variable costs of a product or service. As you recall, variable cost is another way of saying cost of sale, or even costs of goods sold. The Idea Composer is a tool to help in estimating costs and other financial planning aspects. It will work great for demonstrating gross profit. To make the example more realistic, in this lesson we use a hypothetical product called the Smart Pack. The product idea is a fanny pack concept with an extra large battery and some fancy wiring. When assembled, the Smart Pack allows today's smartphones to work for many days without a charge. Great for hiking into remote regions. Okay, back to the product page of the Idea Composer. First, we will pick an arbitrary selling price for each Smart Pack. For purposes of this example, $100 will be the initial price, but we will change this number as we continue the lesson. Material is a variable cost. This list of material is sufficient to make one Smart Pack. We will cover other variable costs in a moment. Remember, gross profit and gross margin mean the same thing. To figure gross profit, the Idea Composer subtracts the variable expenses. In this case, $20.65 from the sales price, which is $100. This example leaves a gross profit of $79.35. Looking at it from a percentage point of view, material is about 21% of the sales price. Gross profit is 79% of the sales price. Next, we will add another type of variable cost. By doing so, we will change the gross profit. This other type of variable cost is called processes. One of the items in process is assembly and test. Rather than assemble the material in-house to make the Smart Pack An outside service performs this process for a contract price per SmartPack. This is a cost that is directly associated with each product sale. Therefore, it is a variable cost. In addition, each time a credit card purchase is placed from an end user, there is a merchant account charge. And finally, there is a shipping cost to the customer, assuming delivery is prepaid. Since we've added the processes to the variables list, the gross profit is now reduced to 71%, and the total variable cost has changed to $29.15.